You did everything right. You got the degree. You got the job. You contribute to your 401k. You pay your taxes. You follow the rules, every single one of them. And you're still broke. Not poor, not destitute, but broke in that quiet, exhausting way where every month is a calculation, where one emergency, just one, could wipe you out. Here's what nobody's going to tell you. The system you trusted, it wasn't designed to reward you for following the rules. It was designed to reward the people who broke them. And the people who played by the book, they're the ones funding everyone else's wealth. Warren Buffett understood this before almost anyone, and in the next 18 minutes, I'm going to show you exactly how the system works, how it punishes intelligence and rewards what looks like stupidity, and more importantly, how to get on the right side of it. Let's go. Let me take you back to 1971. The average American worker earned about $11,800 a year. Adjusted for inflation, that's roughly $90,000 today. A house costs about $25,000, roughly 2 times annual income. You could buy a home, support a family, save for retirement, all on one income. That wasn't magic. That was by design. Between 1945 and 1970, the system was set up so that productive work translated directly into a decent life. Labor had bargaining power. Corporations paid pensions. Banks paid 5% interest on savings. The contract was simple. You work hard, you get a piece of the pie. Then the contract changed, and nobody told you. Between 1970 and 2025, worker productivity in America increased by roughly 70%. You know how much wages went up? 0. Adjusted for inflation, the average worker earns the same today as they did in 1971. So where did that 70% go? To shareholders, to executives, to people who own things, not people who work for things. Now here's the part that should make you angry. While they were quietly redirecting all that wealth upward, they kept selling you the same story. Every commercial, every movie, every graduation speech. Work hard, follow the rules. The dream is still possible. They didn't change the story. They changed the math underneath it. That's not bad luck. That's a contract that was rewritten without your signature. So how does the system actually punish intelligence? Let me show you 3 mechanisms. Each one is designed to quietly drain the people who follow the rules. Mechanism number 1, the savings trap. If you're smart, and you are, the first thing you do is save money. You put it in a savings account, maybe a CD. You play it safe. That's intelligent. That's responsible. Except the system has a hidden fee on your savings. It's called inflation. Right now, inflation runs at roughly 3% a year. Your savings account pays you 0.5%. Maybe 1% if you're lucky. That means every dollar you save loses 2 to 2.5% of its purchasing power every single year. Over 20 years, $100,000 in savings becomes worth roughly $60,000 in real purchasing power. You did everything right. You saved. You were responsible. And the system quietly took $40,000 from you without you ever seeing it leave. Warren Buffett has said this for decades. Savings accounts are one of the most dangerous investments in the world, not because they can go down, but because they definitely will go down in purchasing power. The smart person saves. The system punishes the saver. Mechanism number 2, the 401k illusion. In 1978, corporations started replacing pensions with 401k plans. The pitch was beautiful. You control your retirement. You choose your investments. Here's what they didn't say. The average 401k plan charges about 1.5% to 2% in total fees annually. That sounds tiny, but over 35 years, those fees consume roughly 40% of your potential returns. Let me say that again. 40% of your retirement wealth gone. Not to the market, not to a crash, to fees you were never told about. A pension? The company absorbed those costs. A 401k? You absorbed them. The risk shifted from the corporation to you. The fees shifted from the corporation to you. The complexity shifted from the corporation to you. They called it freedom. It was actually a transfer of cost, risk, and responsibility straight onto your shoulders. The smart person contributes to their 401k. The system skims from it for decades. Mechanism number 3, the homeownership anchoring. The final mechanism is the one nobody questions. Buy a house. It's the best investment you'll ever make. Here's the reality. In 1985, the median home cost roughly 3 times the median income. Today, it's 6 to 8 times. In places like California and New York, it's 10 to 12 times. You now need 2 incomes to afford what one income bought in 1985. And once you have that mortgage, 30 years of debt, you're anchored. You can't take risks. You can't start a business. You can't move to where opportunity is. You're locked in. Meanwhile, corporations like BlackRock and institutional investors are buying residential homes by the thousands, not to live in, but to rent back to you at a profit. In 2024, institutional investors bought roughly 25% of all single-family homes in some markets. They're competing against families with cash offers, no inspections, and infinite capital. You followed the rule: buy a home. They changed the game. Homes are now financial assets competing against trillion-dollar funds. 3 mechanisms, all invisible, all designed to quietly drain the people who play by the rules: the smart, the responsible, the disciplined. And here's the cruelest part. When you struggle, when the numbers don't work despite you doing everything right, who do you blame? Yourself. The system doesn't just take your money, it makes you think it's your fault. Now here's where it gets uncomfortable. You know who often builds real wealth? Not the smartest people in the room, not the most educated, not the most careful. It's the people who seem kind of stupid. The guy who didn't go to college but bought a laundromat. The woman who skipped the 401k and bought rental property. The immigrant couldn't read the fine print, so they just started a business. That's not an accident. That's the system working exactly as designed. Here's why. The intelligent person optimizes within the rules. They ask, how do I save more? How do I get a better rate? How do I maximize my 401k match? The stupid person doesn't even know the rules exist. So they optimize outside the system. They don't save, they acquire. They don't contribute, they build. They don't diversify, they concentrate on what they understand. Warren Buffett didn't build his $130 billion fortune by diversifying into 500 stocks and hoping for 7% annual returns. He concentrated almost all of his wealth into a handful of companies he understood deeply: Coca-Cola, American Express, Apple, and Bank of America. Buffett has said, diversification is protection against ignorance. It makes little sense if you know what you're doing. Translation: the system tells you to diversify because it assumes you're too dumb to think for yourself. But if you actually understand what you own, concentration builds wealth. Diversification preserves mediocrity. The stupid person accidentally follows Buffett's real philosophy: own a few things deeply, understand them completely, and hold them forever. The smart person follows the system's advice: spread it out, hope for average, and pay fees for decades. Who wins? Not the smart one. Let me show you something most finance influencers will never tell you. Buffett's actual philosophy, the one that made him the wealthiest investor alive, is almost the opposite of what the financial system recommends to ordinary people. Rule number 1: never lose money. The system says, take calculated risks. The market always goes up long term. Buffett says, rule number 1, never lose money. Rule number 2, never forget rule number 1. That's not a joke. He means it literally. When you lose 50% of your portfolio, you need a 100% gain just to break even. The math of loss is asymmetrical, so Buffett avoids permanent loss of capital at all costs. How does the smart 401k investor respond to a crash? They're told, stay the course, dollar cost average, the market will recover. Maybe, but if you're 58 years old and the market drops 40%, stay the course might mean working until you're 72. The system's advice assumes infinite time. Your time is not infinite. Rule number 2, be fearful when others are greedy, and greedy when others are fearful. The system says, invest consistently. Don't try to time the market. Buffett says the opposite. He sat on $128 billion in cash for years, waiting. People called him stupid, said he'd lost his touch. Then March 2020 happened. Markets crashed. Buffett deployed billions into companies at panic prices. The smart investor kept contributing every month, buying at peak prices during the bull market. The stupid one waited and bought when everyone else was terrified. Who got the better deal? Rule number 3, your biggest investment is yourself. The system tells you to invest in financial products, mutual funds, index funds, REITs, annuities, products that generate fees for the financial industry. Buffett has said repeatedly that the best return on investment, by far, is developing what he calls earned income skills, the ability to generate income through what you know and what you can do. Because here's the thing no financial product can do: double your income. If you earn $60,000 and you learn a skill that makes you worth $120,000, that's a 100% return. No stock, no fund, no index will give you that. But the system never tells you to invest in yourself, because investing in yourself doesn't generate fees for anyone else. Okay, so you see the system now. You see how it works. The question is, what do you actually do? Let me give you 5 shifts, not hacks, not tips, fundamental shifts in how you think about money, shifts that move you from the punished side of the system to the rewarded side. Shift number 1. Stop saving to preserve, start saving to acquire. The system wants you to save in its currency, dollars that lose 2 to 3% a year. Buffett saves too, but he saves to deploy. He builds a war chest, then waits for opportunity. Your emergency fund? Keep it. But everything beyond that? Start thinking about acquisition. What can you own that holds value or produces income? A skill, a tool, a small business, a piece of equity. Shift number 2. Understand the difference between earned income and owned income. Earned income is what you trade hours for. It's taxed at the highest rate. It stops when you stop working. The system loves earned income because it's predictable and taxable. Owned income comes from assets, dividends, rental income, business profits, and royalties. It's taxed lower. It continues whether you're working or not. The system rewards owned income because that's how the wealthy actually build wealth. Your goal isn't to earn more. Your goal is to shift the ratio from 100% earned income to gradually increasing your owned income. Shift number 3. Concentrate on what you understand. The system says diversify. Buffett says concentrate where you have an edge. What do you actually understand better than most people? Your industry? Your craft? Your local market? That's your circle of competence. Build inside that circle, not outside it. The person who buys 3 rental homes in a neighborhood they've lived in for 20 years will almost always outperform the person who spreads $50,000 across 200 stocks they've never researched. Shift number 4. Own things. Don't just work for them. Every dollar you earn from labor is a dollar you have to earn again tomorrow. Every dollar you earn from ownership earns dollars while you sleep. This is the fundamental divide. The middle class trades time for money. The wealthy trade money for assets that produce more money. You don't need millions to start. You need one asset. One thing that generates income without your direct labor. Then another. Then another. Shift number 5. Stop blaming yourself. This might be the most important one. If you've done everything right and you're still struggling, it's not because you're not smart enough. It's not because you didn't work hard enough. The system is not neutral. It was redesigned. The contract was rewritten. The rules changed, and you weren't notified. The moment you stop blaming yourself, you free up the energy you need to actually change your position. That's not weakness. That's the beginning of clarity. Now, I want to be honest with you. Everything I just said, it's true, and it's also incomplete. Because knowing the system punishes intelligence doesn't automatically make you wealthy. If it did, every Buffett shareholder would be a billionaire. The deeper truth is this. The system doesn't just punish intelligence financially. It punishes it psychologically. Intelligent people see complexity. They see risks. They see the 100 things that could go wrong. And that awareness, that very awareness, becomes a cage. The person who seems stupid for starting a business, they didn't see all the risks, so they just started and figured it out along the way. The smart person? They're still analyzing, still optimizing, still waiting for the perfect conditions that will never come. Buffett himself has talked about this. He said, "I don't look to jump over 7-foot bars. I look for 1-foot bars that I can step over." That's not about being lazy. That's about recognizing that perfection is the enemy of action. The smart person wants the perfect investment. The wealthy person takes the obvious one. This is the hardest shift of all. Not the financial one, the psychological one. Moving from, I need to understand everything before I act, to, I understand enough, I'm going. There's a concept in behavioral economics called the sunk cost fallacy. It says the more you've invested in something, time, money, or identity, the harder it is to walk away from it, even when it's clearly not working. You've invested decades in following the rules, the degree, the career path, the 401k, the mortgage, the identity of being responsible, smart person who does the right thing. Walking away from that? It feels like walking away from yourself. But here's what Buffett understood at 21 years old that most people never understand. You don't have to play the game you were handed. He could have taken a job on Wall Street. He had the credentials. He had the intelligence. But he went back to Omaha, a city nobody in finance cared about, and built his own game. He created the rules. He defined the stakes. He chose the players. That's not just a business decision. That's an identity shift. From, I am someone who follows the rules well, to, I am someone who writes the rules I follow. That shift, from rule follower to rule writer, is the most expensive shift in the world. Most people never make it. They can't. The sunk cost of their identity is too heavy. But if you're still watching this, 17 minutes in, something in you already knows the rules aren't working. That discomfort? That's not failure. That's the beginning of the shift. Let me bring this home. The system rewards stupidity, because what looks like stupidity is actually simplicity. It's the refusal to overcomplicate what should be simple. It's the willingness to act when the smart person is still analyzing. The system punishes intelligence, because intelligence without action is just expensive awareness. You see the trap. You understand the math. You know the rules are broken. But knowing without doing is just a more sophisticated form of imprisonment. Warren Buffett didn't become the wealthiest investor alive by being the smartest person in every room. He did it by being the most disciplined about one principle. Own things. Understand what you own. Hold them forever. That's it. That's the whole philosophy. You can start today, not with $1 million, with one decision that moves you from earned income to owned income. One asset, one skill, one shift in how you see the game. The system isn't going to change for you. It was never designed to, but you can change which side of it you're standing on. If this video hit different, if something in you shifted while you were watching, then you're exactly who this channel is for. Subscribe, turn on notifications. We go deep on this stuff every single week, and I want to hear from you. Drop a comment below. Tell me, what's one rule you've been following that you now realize was designed to keep you stuck? I read and reply to every single comment. I'll see you in